African startups are gaining ground once again, crossing the $1 billion mark in funding within the first 5 months of 2025. With Nigeria pulling in over $160 million so far, questions are being asked about what's driving the momentum, where the next big opportunities lie, and how founders are navigating this funding landscape. Joining me now is Peter Adeyemi, CEO and co-founder of Cubes, to share insights on the current trends, the realities of raising capital today, and what it takes to stand out in this competitive space. Peter, seeing as we've just crossed the $1 billion mark in funding for African startups this year, earlier than we did in 2024, from where you sit, what do you think this says about the current level of investor confidence across the continent right now?
Yes, and I think we must celebrate this milestone because it's kind of like been a long time coming. We've seen funding go down over the last few years. So the fact that investors are coming back to invest in startups in Africa is something we must celebrate. I think the increase year on year between last year and this year, if we compare it, is like 40%, and that's like if we look at the investor mindset, it just says there's like a renewed belief in the continent's ability to execute and build like innovative companies that will go on to become the unicorns. We've seen that most of the investment have been around like fintech, climate tech, health tech, and AI for example. So those are the places where we have seen so many investments in the past few months.
Now, narrowing in on Nigeria, the country has pulled in over $160 million so far this year, which is quite impressive. But we're currently behind Egypt and South Africa. Peter, in your opinion, what can Nigerian startups do differently or better to reclaim that top spot as the continent's leading funding destination?
A couple of things, because I think Nigeria used to be one of at least the first two in the past years. But over the years, we've also seen that number come as Africa's investment came down. But I think what Nigerian startups can do is, so maybe one, reputation needs to change because over the years, we've also seen, because of the many stories around how some of these things some of the funds were used, some of the investors kind of, in quote, lost confidence. So I think the more success stories we can get out of Nigeria, for instance, the more we are able to convince investors that, yes, we are here for real, we are here to deliver. So I think that will be the first thing. The second thing is startups in Nigeria need to also focus on the emerging technology, so like AI. So if you are building something right now and you don't have like a component of AI, you're like building for the past decade. In the decade that we are in, investors want to see that you have incorporated AI. You are incorporating the emerging technologies in whatever you're doing. There's also the fact that we can also leverage maybe diaspora network in Nigeria. We've seen an increase in the diaspora actually investing in what we're doing. So I think just leveraging better on that and making sure that we can double down to take more of those investments. Then generally, the issues around Nigeria and making sure the regulatory framework is better, strengthening all the fundamentals, and all of that. So that will be like my advice.
Interestingly, we're seeing more local capital and diaspora-backed funds coming into the scene here. How has that changed the funding conversation for founders like you? Has it changed the dynamic?
Yes, and this is really important. So in the past years, I used to have conversations with investors, local investors, for context, and one of the conversations I remember very well is one guy who told me, "Hey, I have money, but I don't have patient capital, and patient capital is what you need from investors, because startup is not something you turn around in 12 months. You need 5 years or 10 years to be able to now return that money. So we need more local people who have like patient capital, who are able to just wait, who also understand that startup is not something you turn around in 3 months. Startup is something you invest in, and then you get the rewards, maybe 10x or 20x your investment in 5 years or 10 years. So I think that's where the thinking needs to be for local investors, but also founders like us, just understanding that um, there's still that gap in understanding for local investors. But we are seeing like more diaspora investors kind of embrace the fact they understand from wherever they are, Canada, UK, or the US, they understand how investment is made there, and they're able to um, they can bring that home to us, and then invest in whatever we are building. I also think like improved mentorship can help. I've seen a couple of angel networks, from the diaspora coming here, and just maybe create like an incubator or accelerator program that just helps um, change the game essentially.
Looking at the bigger trends here, Peter, 2025 seems to be the year of mid-sized rounds. We're seeing fewer of those massive $100 million and above raises, and more startups are landing solid $5 to $10 million rounds. Now, what's your take on this shift, and how should founders be adjusting their fundraising strategy to fit this climate?
Right, very important question. And I think the first thing to note would be again with the investment going down, it just means that no people are not really throwing money to African startups. So whatever amount we can raise, it means we have to actually spend it wisely. In startup, there's a methodology called the lean methodology, which means like you need to actually run as lean as possible to gain as much value as possible. So that would be like the first thing I think about, which is just to run lean. The second would be to focus on milestone and the KPIs that are really important. There's always the urge to just go and, for instance, raise big money so you have like a large runway, and you're not really caring about metrics that are important, the KPIs that are important. But what we are now learning is if you get 100,000, you have to focus on the important things. So, like, what's your revenue already? How many are using? How active are they? So those are the things I think one should really focus on. Um, yeah, I think those two things, maybe with capital efficiency as well. What's the ratio of the inputs to the outputs? How efficient can you use that fund?
Well, it's interesting to see climate tech, health tech, and AI startups getting a lot more attention. For founders building outside of those hot sectors right now, do you think there's pressure to pivot, or is there still room for ideas that sit outside these current trends?
I think is 1000% important. If I can use that, we have seen um, like there's literally nobody. Maybe there will still be some people, but most people know about AI right now. So if you are building your product and you don't have AI in there, you are doing something wrong. Um, I am building a solution for students, and there's AI in there where they can deepen their learning. They can help, you know, they can help themselves understand the subject matter more. They can double click on the material. They have like a personal tutor. And that's what I think everybody else should also do. So no matter what you're building, there's an element of AI that can help you either speed up your work internally or your users. You can also help them. But climate tech and health tech are also seeing so much traction. For instance, before I became CEO and co-founder at Cubes, I was in an health tech insurance tech company where we onboarded like 7,000 hospitals. There's still a lot of gap in health tech, for instance, where a lot of the healthcare challenges that we have here needs to be solved with technology. So yes, I fully agree. Climate tech, health tech, AI, something definitely like a lot of founders should look at. If you look around you as a founder or as someone who is interested in entrepreneurship, you find so many opportunities around those areas.
And finally, Peter, while Q1 was relatively strong, Q2 started a little slow. Now, some say we are on track for another big year, but some others aren't so sure. From your perspective, what do you think the rest of the year holds? Are you sensing continued momentum or more cautious investor behavior as we go forward?
I think maybe it's not fully over the funding winter, but I think we are now in the green for the most part. So we are seeing like a lot more invest return. For instance, Cubes, my company is in the Antler program. Antler is a global day zero investor. They just got to Nigeria, and this is their first cohort. So we are seeing like a lot more people return. So I'm very positive that will actually beat the last 2 years, for instance. So I think the last part of the year will actually be better than the first half. I think the trajectory will keep going up like that for the coming years as well. As more opportunities open, as people keep building like very interesting and innovative technology, and just naturally growth in the market will keep going up.
Thank you so much for sharing your insights with us, Peter Adeyemi, CEO and co-founder of Cubes.
Thank you for having me.